Some pretty legitimate warning signs are going off across the global economy within crypto and outside crypto that make me feel very convinced that this market, as well as several others, are headed for lower prices in the not too distant future. Again, I want to be very clear that warnings to investors and making bearish videos is not something that I like to do. I've been called a moon boy more than once, and the reality is that I'm long-term extremely bullish on crypto as one of the most important innovations in our society that will eventually distribute a ton of wealth to countless people. But the reality is, right now, patience is the name of the game. In fact, I've been trying to reimagine now during this bear market the entire approach of this channel to the market. So sometimes when I'm not making content, the reality is I'm trying to brainstorm the next iteration of EllioTrades and make sure that I can always bring the maximum amount of value to this audience. So as the world is changing, so too might this channel and my approach to content and delivering what I feel is the most important content for you all. But for now, I can't help but make another update video on the fact that I do believe that patience and caution are extremely necessary right now, and that there are a lot of red flags going off across this economy that I think are ones that you should know about, especially as this bear market rally continues to extend and I see more and more comments saying that we've entered a new bull market. As you can see, Bitcoin's having another splendid day here, but if you look, it's up more on the day than it is the week. In my opinion, this is a lot of sideways, and even though the price has been buoyant, it's important to realize, look, this is the middle of the summer. The big hedge fund managers, the big money, they are not trading at their battle stations. Now, since big money really entered into crypto between sort of 2017 and 2022, the reality is that most of the reliable price action happens during normal business hours, during the week. Weekend price action is far less reliable. And that means that most of the money in crypto is still happening through traditional institutional investors. So when big price fluctuations, when big price increases happen, it's usually during parts of the year and the week that are most common for these institutional players to be in their chairs. Right now, it's August, and most of the big boys and girls are currently on vacation. So any of this price action feels quite flimsy, and my gut says it's pretty unreliable. We see some pumps across the board, but something that I think is really alarming is pumps out of very low quality coins. Not to pick on Celsius here, but it's up 10.9% on the day. And as you can see, over the last 7 days, it's up 46%, 78% over 14 days, 101% over 30 days. And this is, of course, after they've declared bankruptcy, halted withdrawals, and pretty much screwed over tens of billions of dollars worth of depositors. I mean, come on. This is ridiculous. We also have Ansem here, who we haven't covered in a while, but it's nice to see him sharing here on Twitter some very meaningful updates. He says, "What is dead may never die." Nice Game of Thrones shout out here. And what we see is AMC, Coinbase, GME, and SHIB. This is the Gen Z meme gambol index. I believe this is a Robinhood snap. But as you can see, we have the meme stocks making a comeback. Meme stocks are, of course, notoriously associated with FOMO tops and degenerate gambling in the markets. Not what we'd like to see at this stage in the markets, where a move towards quality and long-term growth would be the real marking of a bottom in these markets. Again, maybe I don't know what I'm talking about, but you'd imagine that people would start piling into things like Bitcoin and Ethereum when the time is right. Wifey Alpha here with a picture that says about 10,000 words. It's kind of how I feel right now. Again, I don't like being bearish like this. I don't like screaming bearish stuff. I just have the scars to prove that FOMOing into bear market rallies and trying to play these moves and trying to make a few percentage points, while most likely the outcome could be disastrous, is just far too risky. And to me, that means waiting for the macro Fed pivot, which is clearly not here yet. Waiting for that pivot and then allocating slowly to Bitcoin, Ether, and then a few high quality plays. I think that's the easiest way to do this market. And so my goal is to try to curb that FOMO until we get there, because once we do, the up only cycle, I believe, will begin. Printer is coming, and I do believe that the people who enter into the market during that phase will experience storybook gains, true life-changing stuff. This is the winter time though, not the printer time. And I think that understanding the difference is really important. And so, hey, here I am making another warning video saying, don't be one of these little birds or you might end up deep in the hole. Getting chopped up and liquidated in a bear market, and depending on how you define it, a recession, is just adding insult to injury. So do yourself a favor and stay safe out there, please. Another major red flag here, insiders, meaning people within publicly traded companies, are dumping their stocks at the highest rate since January, and one of the highest rates here, and certainly creating a notorious signal that when it's done en masse across the market, usually signals that there is more pain to come. Usually insiders tend to have knowledge about what might be coming next. Again, this isn't so much insider trading, just to be clear. This is insiders that are publicly on record for anyone to discover and see, because it's public record, selling their stocks. They have to disclose these things when they sell. So this is a very useful indicator. Again, it doesn't mean anything in and of itself, but when you line it up with everything else going on in the economy, this huge bear market rally, feeling like it might be reaching its apex, again, seeing insiders, people within the publicly traded companies dumping their stocks is another reason to raise your eyebrows and go, is this a new bull market if everyone is trying to exit right now? Or is this just once again retail and the normings becoming exit liquidity for insiders? This is what I want you thinking about, because the reality is that bear market rallies are super convincing. That's when they get you off the sidelines and get you to spend your crypto before it's a safe time to buy. Well, obviously there's no perfectly safe time to buy, but there are more risky times. And in my opinion, after a bear market rally has already seen almost 100% gains in Ethereum, multi-100% gains in L1 platforms like Polygon, and of course a decent recovery from Bitcoin, to me it feels quite a bit dangerous. Again, there's nothing wrong with dollar cost averaging if you plan to do it over the course of years. Starting now is totally fine. But the reality is, if you're jumping all in or all out, which unfortunately too many people do, feels like quite a risky moment, one that I would like to preach caution around. We also have private investors selling a record number of their stocks. And I wanted to point this out because bear market declines, according to Gianluca, based on percentages, tend to be backloaded, with the largest declines coming in the final third portion. Now, it's important to realize that this is a deceptive metric, and that's because numbers are a little bit tricky. Let's say the decline between 69K and 42K happens again. Well, that decline the first time was about 30%, whereas that same decline the second time is more like 60%. The same shift dollar-wise can actually make up dramatically more percent. And so let's just say you have two different stops on the way down of equal proportion. Well, that second journey is a far higher percentage. So just know percents are super tricky, but just know that typically the last leg of the bear market has dramatic amount of percent losses. So just know that there could still be some pretty stunning percent losses ahead of us. And that's why I've been preaching risk management here for so many months, because the reality is we're approaching the point in time where buying will become a superpower. I'm going to talk all about the contrarian thesis and why I'm so bullish long-term, but why I need to preach caution short-term. That'll all happen here very quickly at the end of the episode. And again, I'm sure you guys saw this, but the labor market is going crazy. This is another form of inflation where actually the cost of labor is going up and up and up, which means that demand is too much, the economy is too hot, and it gives the Fed even more fodder to weaken the economy, to take some of the demand off, raising rates and tightening the economic conditions. Again, I don't see any evidence of a Fed pivot despite some overexuberance out of the charts over the last few days and weeks. I don't actually expect this now in 2022 like I was originally hoping. And the reason is because this market has been way too resilient and way too hot. The Fed still has a lot of work to do. More on that here at the end of the episode. And finally, we have a piece of news that new regulations are coming towards the crypto mixer on Ethereum, Tornado Cash. And Circle USDC has now frozen some users' funds that have used Tornado Cash. And this is, again, another warning sign because this regulatory FUD is also coming, the regulatory wave that we've been talking about, in response to a lot of things happening in crypto land. It's all coming together. The macro, the regulatory environment, and just predictive cyclical price drawdowns for overheated markets. Let's wrap this up right now because there is a lot here. I want to be very clear. I plan to start allocating aggressively to crypto soon over a long period of time. The reality of this market is, for the first time in forever, I've started to feel like believing in crypto and investing in crypto has become quite contrarian. When I talk to people in real life, I say that I'm in crypto and they already are saying, "Oh, how you doing? Are you okay? Are you surviving?" It's almost a pity party. Whereas a year ago, people were praising me. People were calling me a genius. People were saying, "If only." That is the cycle of being in crypto, and for the first time in a long time, it's become unfashionable, uncool, and dare I say, people think we're totally crazy to be participating in this market, which means that we're starting to get to the part of the market that is actually worth paying attention to. Because in reality, this stuff is not going away. Ethereum is the world's computer. It's a beautiful thing. Bitcoin is uncensorable money, and each of these assets, along with incredible metaverse protocols, I believe will define the future of the internet. And I believe believe that people holding those protocols will become wildly wealthy. However, in between now and then, in order to participate in that, I believe that the number one strategy is to be patient and to fight the FOMO and to read the room. Let's be real. The Fed is not stopping anytime soon. The market went crazy because Jerome Powell described the current stance as fairly neutral. Well, guess what? We don't need neutral right now. Never in the history of inflation has inflation come down meaningfully without the Fed funds rate being higher than inflation, which means currently that the Fed funds rate would need to go up to 9%. But right now we're just in the 2s. That is a far cry away from where it seems like we need to be to bring inflation down to that 2% mark that Jerome Powell wants. Don't fight the Fed. We're learning that. And I believe that this bear market rally, while very needed and very likely to occur even maybe another 1 or 2 times, is probably not the beginning of a bull market. Again, I could be wrong, and I certainly hope for everyone invested in these markets that I am wrong. But something in my gut tells me that it's time to be cautious. Again, I don't like making these videos. In fact, I don't like being bearish at all. It's not what I'm interested in. I'm interested in the technology, the impact on our society, and how these particular assets and protocols will actually be one of the biggest gifts to the everyday person, to the average Joe around the world, why I believe everyone has a place in the crypto industry. Now, in order to focus on that, I'm starting to reimagine my own content on this channel because I just don't want to be a weatherman every day telling you if it's going to be hot or cold. I don't just want to be telling you about individual projects. I want to be projecting much more thesis-based, long-term focused content that I believe in and interests me. And so I'm going to be reimagining my content on this channel. I hope you guys are excited for that journey, but just know I'm always thinking about how to enrich this audience in every single way. And right now, I think the best thing I can do is provide warning signs and help people from getting too excited about several weeks here of green numbers. Even though we're only at 23K Bitcoin from 69K, that is by no means a major recovery. We're going to have another episode coming up very soon where I talk about the Ethereum proof of stake merge, one of the biggest changes to crypto in its history, and why I think it's actually a really big deal. As always, I sincerely hope you guys enjoy these videos. If you're getting value out of it, smash that like button. I hope you guys are staying safe wherever you are. I plan to be making a lot more content over the coming days and weeks. As always, I thank you so much for watching. My name's EllioTrades. You can follow me on Twitter at EllioTrades, and I'll see you very soon on the next episode.